Welcome to the August 10th, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, president of McGowanGroup, and as your financial weatherman, I'm going to take you through the real data that came from this week's headlines, and we're going to start with jobs. Most people don't know the labor force data, and it's released, and this is from Bloomberg, Bureau of Labor Statistics, as well as the Department of Labor. But what we see here is the rise in the American economy to 159 million total that are in the labor force, people with jobs. Now, here is the pandemic, 133 million. What is signaled here, I want to cover in detail because it changes perspective for the second half of 2020. Very important. Consistent with the projected GDP economic growth at over 20% annualized that we projected for the third quarter based on the Bloomberg estimates. This is very consistent with that, but it shows you something about the recovery. The number of jobs restored since this 26 million job loss, 11 million people already back reemployed. And this month, of course, was 1.8 million announced on Friday. Why is this important? Well, it's probably going to slow down a bit in terms of the number added each month, but it sets a trajectory for record employment. It also changes perspective from this to this, and that's going to have a big impact on sector rotation in the markets. Right here, we see what happened to the S&P earnings. Earnings were not as bad as expected. That was a repeated headline all through July. July was essentially the bad news from the shutdown quarter. Earnings were actually down 9%, sales were down 11%. That was not as bad a drop as what was expected. And that part of the pandemic is over. What did we learn from this? The top performing earnings growth was actually in consumer discretionary, revenue down 21%, but profits up 12%. Good job apparently on their management there. Healthcare, a 10% gain in earnings growth. Wow, that's huge. Not unexpected because of what we'll call greater preparation during the pandemic and greater medical expenses. But that's a 10% increase. Sales were up 3%. So that was the other leading sector. Information technology, less than utilities. Utilities had about a 9% increase in profits, even though revenue was down. Why? They had lower costs on natural gas and other areas. But I'm going to get to natural gas. That's going to be important here. Information technology, sales growth was 5%. All the money, I'm about to show you this too, has been flowing into that sector. The IT sector now making up the better part of 30% of the S&P 500. Well, their profit growth was only 0.68%. Is that going to support 30 to 100 times earnings when people start to look forward to a different part of the cycle, and that is economic recovery, economic growth, jobs growth? You're going to change, I believe, away from that because it's all been about the companies with COVID immunity. And the FANGs, Facebook, Amazon, Apple, Netflix, Google, deemed COVID immune. And yes, they had good results, but the sector is not justifying the current multiple. That's dangerous because we're about to shift into the recovery mode. This is the Dow year to date with its total return, a dividend of about 2%. And what we're seeing is still about a minus 4% for the year on price for the Dow. But Apple making up a big component driving that index. Without Apple, the estimates are the Dow would be about a minus 15 so far this year. Now, here we take the Qqq Index. All the money's been about tech, this parabolic increase. And profits were only up 0.68%, less than 1% for the tech sector, which makes this up. If you start to shift towards a recovering economy, you pick different companies and Does COVID immunity matter if we're actually recovering even with dealing with the pandemic? Now, here we go. This is an interesting chart. Real estate is a minus 5% year to date. The regional banks, and that would include, for example, Texas Capital Bank, down over 40%. Comerica Bank, based here in Dallas, down nearly 50% for the year. The regional banking index down 34% right here. But look at the REITs. They held like a rock, a minus 5%. What has not happened is a near 30% reduction in office space by the financial firms. They've deemed a third of the workforce is not coming back. And potentially as much as a third of the restaurants, at least here in North Texas, may not be here a year from now. That means the real estate investment trusts have about 6 months of damage that they're going to be reporting, while many other companies are starting to recover earnings. I would place the real estate sector not at a minus 5, but closer to a minus 35, a 30% potential risk between now and December, before the bad news is completely built in from what we'll call rent reductions, people that just walked rents, people that don't pay. We may find we were in an overbuilt cycle. Now here, what's this chart? This looks encouraging. That's natural gas. For some reason, the demand for natural gas exploded the price from a $1.40 low at the lowest point here in the pandemic. It's actually June, to $2.17. What does it mean? Demand for natural gas is strong, and of course the underlying infrastructure that provides natural gas proving resilience. The oil prices this week hit a post-pandemic high of about $43 a barrel, and that signals that demand is being restored for oil. When you get to record demand, which is about right here, August of 2021, and that restores the 2019 levels. That's projected by the EIA. A shift away from a technology to more cyclical names that are huge beneficiaries from the recovery that's already underway, evidenced by the first chart on jobs, which is great news. There's 15 million more jobs to go to get back to record employment. How long does that take? That trajectory, even if it's not going to be as good as May and June, what it means is a gradual increase to record employment, likely by 2022, if not before. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in. Be sure to get to NetWorthRadio.com for more charts and graphs, research, and fill out the preliminary client questionnaire. Come down here to the Crescent, get a tour, a free temperature check, a free face mask, and free hand sanitizers, and we'll give you a couple extra for the kids if you want. Thank you for tuning in. We look forward to next week with you right here at YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.